I would like to welcome you guys back to my channel. To all those that have definitely subscribed, if you haven't, you can simply hit the subscribe button, as I do post a lot of valuable content for you, just like what you're going to be seeing in this video. In this video, you're going to be seeing something that you barely see, something that people don't really share, about the difference between the indicators and the clean charts. So what happens is that indicators are just something that a person made, which it takes the open of the candlestick, the close, the high and the low, and then it gives you data feedback of something that has already happened. But now I'm going to be showing you something that's a bit different, price action. What happens with price action is that you trade with the hedge fund, the fund managers, the banks, and all these large companies. Remember, we're speaking of like real traders that trade with billions or millions of dollars, and that's what we're going to be looking at. Like, because one thing that's interesting about this is that you're able to catch those impulsive movements, because I'm sure you've been caught up in those trades whereby you enter a trade and then it keeps on just playing around, it keeps on playing around, keeps on playing around, and as soon as you, let's say you run out of patience, you take those profits or loss, it impulses like massively in your anticipated direction. That's when the banks or the hedge funds are entering. So that's one thing that I want to show you guys on what it is that we can do in order to be able to just be able to see the market in a different way. So let us just jump in on the charts so you can simply see the difference between indicators and what clean charts can do to us. Okay, yes, now I want us to just take a quick look at GBP US dollar here. So what I'm going to do is that I'm going to show you two types of different types of the indicator when the charts are, we have placed the indicators on the GBP US dollar. Not only that, but I'll also show you what it is that we utilize. That's the type of charts, the clean charts that I use. Okay, because remember that I'm trying to show you why I don't actually use indicators. I just want to emphasize the fact that price action works for me. Doesn't mean that it works for everyone, but it works for me. So I wanted to just take a quick look at the types of indicators that people normally start up with me. So you've got RSI, you've got things such as Bollinger Band, you've got things such as moving averages that you hear of. So let me just start off first by putting the RSI here on the charts. Okay, it's RSI. I'm going to start up with it, and then what I'm going to add to is the moving average, and I'll also add up the Bollinger Bands. So I just want to show you guys on how a bit complicated or messed up this is. Like, even if you're a beginner trader, you're going to feel like this is just way too complicated for you to be able to trade Forex. Like, it's going to seem like trading Forex, it's like a difficult thing to do, okay? So let me just add up here the Bollinger Bands. And I've traded these like 2 years ago. They didn't work out for me, and I don't really know like how you'd be able to develop a strategy with the GS. It works for other people, for some people, but I wouldn't know. Okay, so even if you just take a quick look at this, you can simply see here with the RSI, it has all these different types of numbers here on the right side. Man. So there's a 70 here, there's a 30. Normally it will be 70, 30. Sometimes it will be 80, 20, and all those levels. So what happens is that when price is just above this level here, they'll believe that it's overbought. That means that we're starting to look for sells. When price is below this level here, it's oversold. We're starting to look for buys. So yes, maybe there might be confirmations that you need to take a look at first. But just take a quick look at this move here. You would have seen here that you would have like missed out on all these entries to go to the downside. Not even only here, but also here you'd be missing out on all these entries, because let's say if we take a quick look at it, the only time it said oversold, overbought here, it's somewhere around here, and somewhere around here, okay? And let's take a quick look. Even here it said so. So it out of this whole trade, if I may say so, it gave us only like what, 3 types of entries. Okay, it gave us 3 types of entries. But not only that, let us take a look at where it says overbought, oversold, somewhere down here. It said that price has dropped too much, so it should start to go up. But see what happened, price didn't even go up, like you would have been in the negative. Even here, you can simply see that it said the same, but price didn't really impulse all the way to the upside. Didn't give us that nice impulsive moves that we normally look for. Even here, it said the same thing down here, but didn't give us that much. Okay, but that is the RSI. There's different types of maybe I'm not explaining it in a much more appropriate manner. There's people that really do trade these and make money with them, but you can simply see what I've got here. It's also the Bollinger Bands. So what people normally do is that they might look at this line here at the top side being a resistance. They might also look at this one here at the bottom side being a support. So whenever it hits support, they look for buys. Whenever it hits resistance, they look for sells. We do know that. But let's say, for instance, let's take a look at current market price. Because remember, these things, when a person is showing you these things from what has already happened, yes, it's gonna look like it's working, because they'll be like, you see it here, you see it here, it worked, here it worked, here it worked, and it's not really like that. Because, like, let's take a quick look at current market price. Here you'd be looking for buy. Look at this huge impulse to the downside, and here would be looking for a sell because of the way that I trade. I'm just going to explain it to you now. Okay, you'd be looking for a sell. So let's say now, for instance, market is going below this level 30. So you're gonna start looking for buy, and here it's already somewhere around. You're gonna start looking for buy. Let me just say so. But now I want to show you with clean charts what it is that we're looking for. Okay, so let me just move Bollinger Bands out of the way and maybe insert moving averages, which is something that we are all familiar with. Okay, you can simply see as a blue line. Okay, I don't know what which one they normally use, but I've seen something like a 50. There we go. Okay, there we go. 50 period. Yeah. So you can simply see even the moving average, it's almost like the same thing. Whenever price bounce on it, it can be found as support, Whenever price bounce, like let's say up below it, like it hits it from the bottom side, can be found as the moving average, treating it as resistance. But that can also give you a lot of false breakouts, because take a quick look at what happened here. With me, this would have just been a continuation pattern, if I may put it that way. Could have just been a continuation pattern, which I'll be looking for a buy at the break somewhere around here. Do you get that? But I'll just show you a bit deeper. Not only this, I'll show you a bit deeper. But here they'll be looking for, and then when it broke like this, they'll be like, oh, it broke out a sell, and all those types of things. So these, yes, they do work for other people, or they do work for different types of strategies. But at the same time, it also depends on what it is that you want. Do you want to have complicated charts, or do you want to have clean charts? Do you want to have charts that you can easily understand, or let's say be able to just look at it in a much more simpler way? Or do you want to have charts that you're gonna have to have all these things to just back up what you have to say about a specific trade? So let me just show you a quick example on GBP US dollar on what it is that I'm gonna start doing. Let's say if I'm analyzing this pair from a bigger time frame, then I'll also go to a different pair, AUD USD, which I already had the analysis, because the most important thing is for you to be able to forecast, like to be able to know what the market is going in the future, like in the next 10 moves, instead of knowing what happened before. So this is what I'm going to do. I'm just going to, on the bigger time frame, this is the pattern that I see. Okay, can simply see that we had a beautiful ascending type pattern. Price broke structure here. Can simply see this double top formation that broke to the downside. Okay, which means that with the 90% rule, I teach this in my course. With the 90% rule, price should always come back to the starting point of the correction. Okay, of the structure that it broke out. Like currently, this is the structure that it broke out. So 90% of the time, price should come back down to here. Okay, and you can simply see here, price is going all the way down to there. But let me just also give you something like this. Okay, yeah, we had a beautiful structure somewhere here. So you could simply see what also this is. This is the nature's theory, whereby price moves in three types of impulses and corrections. So normally it's an impulse, it's a correction, and it's an impulse. An impulse is where the market is moving with a clear direction, and a correction is where the market stops a bit and breathes, just so it can be able to gather the next impulse that's coming. So that's what we start. You can simply see this impulse correction here. The market didn't have any clear movement, and now it impulse all the way down. But we would have still been looking for sells, because we know the market has to come all the way down to here. Okay, so far this is just like with the bigger time frame. Yes, obviously I'm going to drop down to the 4 hour, the 1 hour, just to come up with clear movement. Let me just go to the 1 hour and give you guys how we would have caught a sell. Yeah, just like how we caught AUD US dollar today, which I'll just show you guys now. Okay, so knowing where the market is going and stuff, this is what I'll be definitely looking at a move such as this one. Okay, now because of price, I'm already dead impulse. I won't really say much, but you can simply see what price is telling us here. So let me just have something like this. As soon as price broke below structure, I'll have this sell stop. Okay, stop loss just above this area here, and obviously my target here at the 90% rule. You can simply see that it's a simple 9% on just the straight. So already would have been running at anywhere close to 4.5%. Can you see? But this is just it's not me going a bit deep. It's just me showing you guys what it is that the difference between the indicators, like utilizing indicators and just clean charts. So what I'm gonna do now is that I'm gonna jump onto AUD US dollar. Okay, before we jump quickly onto the chart on AUD US dollar, I wanna show you guys something. You can simply see with this pair here, we had AUD US dollar. We caught it exactly at what we call the multi-touch confirmation. Exactly there we caught it, and then we went all the way down with it. This is the 4-hour time frame, but I also wanna show you on the 1-hour time frame what it is that we also got. We saw something like this, an ascending type pattern, and give us at the third touch, which was a high probability setup for us. We took this trade fortunately, and we're still able to hold it all the way down to, can you see like how it was before this, after what I just showed you now, and it's still the 4-hour time frame. So it dropped all the way down massively, and now we spotted another entry somewhere around here, which means that we're still coming all the way down here to the 90% rule. Let me just go to the 60 minutes so you can simply see this mini correction that we saw, and it gave us a lot of entries, because you can simply see an entry where here was here, an entry here, entry here, and entry here, and even an entry here, the one that we just recently got in. So what I am going to do now is that I'm going to quickly jump on the charts and go to the AUD US dollar just to see what it is that it is doing now. Okay, there we go. So this is the same pair or setup that I just showed you guys a few seconds ago, which means that with the way we trade, okay, with the way we trade, like with the clean charts method, one thing that I would say is that you just simply look at the impulse correction, impulses, okay? That's very much simple. Like you look at the impulse correction. So it's the nature's theory. What happens is that the market moves in 3 types of manners, like whereby it impulses, that's when the banks are in, and then whereby it corrects, that's when most retail traders are in, and that's when there's no actual clear movement on the market. It's either it's just correcting, or it's anything, or however you want to call it, maybe a retest, however you want to call it. And then it impulses. So what normally happens is that with the impulse, it shows us the first thing where the momentum is at. So if it impulses all the way downwards, we know that the momentum is to the downside. Then we wait for a correction. A correction, once it does present itself, it's going to show us whether it's a reversal or a continuation pattern that has presented itself. Meaning that if it's a continuation, it's still going to continue going down. If it's a reversal, it's going to go back up. So we wait for that next impulse, and with that next impulse, that's when we execute trades. So this trade is the exact one that I showed you guys a few seconds ago on that app, on the public group of my one Telegram group. So what happened is that I shared it on the premium group, and then I did share it on the premium group, and then we got that set up. We still locking some maximum profits on it, and then recently, just today, I shared the one that we took today on the Telegram public group. So I believe that you guys can also, like all of you guys watching these videos, can also maybe get a chance to be in the public group, where it's just free, and you'll be able to just get some of the setups that I share. Normally, obviously, I do share a lot in the premium group with the premium members, but with the Telegram members, I do get to share something which is also high probability. So now with this being said, like you can simply see that the first target, the first touch, second touch, third touch, first touch, second touch, we did know that it has to break to the downside. Why is it? Because it gave us this multi-touch confirmation. Not only that, it also gave us this beautiful ascending type pattern within the structure, which makes it a bit more like it adds up to us looking for what it is that we're looking for. Because you can simply see that a third touch is here and also a third touch here, which makes it high probability. Fortunately, we caught it somewhere around here at the break, and then we rode all the way down with it. It broke this huge structure here. Most people don't know when breakouts are going to happen, but we are able to anticipate that because of understanding how structure moves, the impulse, the corrections, and all these types of multi-touch confirmations and stuff. So even that, we did know where the target has to be. So it's not, when I say we did know, it doesn't mean that all trades are always going as we anticipate. It doesn't happen that way. Just that out of 10 trades, 7 trades would go in the direction, and our risk to reward is always 1:2, 3 or more. You can simply see here it's way more than a lot. Even here it's like what, 4.7%, which is amazing. But target being somewhere around here, 90% route, like I said. And now we're able to just bank a few. Let me see the one that just got activated recently. Advantage of it is that as soon as it does activate you, once it does impulse over, you get the ability to place to lock your profits, if I may say so. Okay, so it did activate this after we saw this beautiful correction. Yeah, so our stop loss is 15 pips, as you can see, minimum stop loss, and our target is somewhere around here. Okay. And this is how we actually look at the markets. Like this is the difference between the clean charts and the indicators. So I believe that you guys are able to just know what it is that you prefer to utilize. You don't have to use this because I use this, but you just have to know, do you want clean charts or you want maybe charts that look a bit more extreme. So it depends on what it is that you prefer.
And there you have it. I thank you so much for watching it up until the very end. And if you took notes, well done to you, because you are really gonna start seeing the market in a different way, like I said, because that's the whole point of this video, to be able to see the market in a 3D perspective. Not only that, but to be able to be 10 steps ahead of the market. But yeah, if you're a person that treats indicators, please do just comment below and let me know what it is that like what it is that they've been doing for you. If they really do work, just let me know how you've been treating them and stuff like that, so someone who also treats them can be able to relate to you. And if you do want to be able to treat like the way that I do, see the market in a 3D perspective, all you can do is just visit my website. And yeah, I'll just try to put the link down below for also my Telegram public channel, on which you can also get on my website. Just go into forexchasers.com and scroll all the way down, and you'll be able to just get the instructions on what to do to be able to get into the public channel. But I thank you so much, and be on the lookout for the next video, because I'll be just coming with a lot of valuable videos for you. Thank you.